Every trader, regardless of experience or expertise, inevitably confronts that all-too-familiar, heart-pounding juncture in the relentless arena of financial markets. You initiate a position with an unshakable sense of conviction, your analytical framework honed to precision, like a master craftsman's tool, your key support and resistance zones etched with clarity on the canvas of the chart, and your risk boundaries delineated with mathematical rigor to safeguard your capital. As the price begins to dance in harmony with your projections, a subtle yet exhilarating glow of profit materializes on your trading dashboard, bathing the interface in an optimistic shade of green. In that electrifying moment, your heartbeat accelerates, a primal surge of adrenaline courses through your veins, and an insidious inner voice begins its seductive murmur. Lock it in right this instant before the tide turns and it slips through your fingers like sand. Your mouse pointer hovers tantalizingly over the exit command, fully cognizant that your meticulously devised strategy anticipated far greater yields, yet the overwhelming crescendo of raw emotions, fear, doubt, and greed overpowers the steady voice of logic and preparation. Before you can fully rationalize the impulse, your finger clicks, sealing the premature closure and capturing only a fraction of the potential harvest. What follows is an avalanche of bitter remorse, a self-inflicted wound that festers as you stare in helpless frustration at the chart, witnessing the price inexorably advance to the very pinnacle you had foreseen, achieving its destiny without your participation, leaving you as a mere spectator to your own missed opportunity. This archetypal episode distills one of the most insidious and ubiquitous psychological confrontations in the trading domain: the persistent, often debilitating inability to sustain positions through their full, intended trajectory. On the surface, it masquerades as a benign triumph. After all, realizing any profit, no matter how meager, registers as a win in the ledger of immediate gratification, a momentary pat on the back for outsmarting the market's whims. But delve deeper, and it unveils a tapestry of profound shortcomings, an erosion of unwavering trust in the systematic architecture you've painstakingly constructed, a fracture in the unyielding discipline essential for executing trades with mechanical precision, and a subconscious prioritization of fleeting emotional sanctuary over the cultivated patience that fuels sustainable exponential growth. When this insidious patterning rains itself through repetition, trade after trade, session after session, it morphs into a silent assassin, methodically dismantling your developmental trajectory as a trader, confining you to a plateau of mediocrity, where potential remains forever unrealized, and transforming what could be a path to mastery into a labyrinth of self-doubt and unfulfilled promise. Why then does the act of holding trade emerge as such an excruciating ordeal, one that tests the very limits of human resolve? The answer lies not in the superficial realm of strategies or technical indicators, but in the profound, labyrinthine depths of human psychology, where the markets act as a merciless excavator, unearthing every concealed frailty and magnifying it under the harsh spotlight of financial consequence. When you succumb to an early exit, your actions are not a calculated response to evolving market dynamics or fresh data inputs. Rather, they represent a reflexive surrender to the shadowy undercurrents of your own psyche, fears that have been woven into the fabric of your being through evolutionary imperatives and societal conditioning. These fears manifest multifold: the visceral terror of watching hard-earned, unrealized profits evaporate like morning dew under the sun, the ego-bruising dread of conceding that your analysis was flawed, exposing vulnerabilities in your intellectual armor, and the paralyzing apprehension of seeing a once promising green oasis morph into a barren red desert, symbolizing not just financial loss, but a blow to your self-perceived competence. These emotional forces command extraordinary influence because they tap directly into ancient, hardwired instincts for self-preservation, instincts that trace back to our primordial ancestors who survived by clutching tightly to scarce resources. From the cradle, we are indoctrinated with maxims that reinforce this hoarding mentality: a bird in the hand is worth two in the bush, instilling a bias toward immediate security over speculative abundance. In the amplified crucible of trading, where personal wealth is perpetually at stake, these instincts balloon into overwhelming compulsions, distorting judgment and turning what should be a disciplined process into a battlefield of internal conflict. Yet embedded within this struggle is a profound paradox that illuminates the essence of trading mastery. The disciplined art of holding positions to their logical fruition is the defining chasm that separates the impulsive amateurs from the resolute professionals who thrive amid chaos. Amateurs, ensnared by the siren song of quick fixes, content themselves with scraping together paltry scraps, mere pennies pilfered from Thatable at the first whisper of movement, sacrificing the feast for the crumb. Professionals, in stark contrast, internalize the game's true nature as a symphony of enduring consistency, eschewing the dopamine rush of instant validation in favor of a measured, long-term orchestration. They comprehend through hard-won wisdom that fidelity to the original plan, enduring the market's capricious fluctuations without deviation, is the bedrock upon which ascending equity curves are built. Curves that compound wealth not through sporadic fireworks, but through steady, inexorable progression. A single instance of premature liquidation may appear trivial, a negligible oversight in the vast expanse of a trading career, but when aggregated across the temporal expanse of weeks, months, and years, it exacts a devastating toll. It systematically unravels your meticulously calibrated risk-to-reward architecture, evaporates the probabilistic edge that separates winners from the pack, and ensnares you in an endless vortex of frustration where progress feels perpetually just out of reach, taunting you like a mirage in the desert. Ponder this scenario with unflinching introspection. You engineer a trade with surgical precision, hazarding 20 pips in pursuit of a 70-pip bounty, a configuration imbued with positive expectancy derived from rigorous backtesting and statistical validation. Yet haunted by the specter of reversal, a phantom born of past scars, you habitually capitulate at a mere 10-pip gain, trading potential for perceived safety. On the drawing board, your approach is a paragon of profitability, a well-oiled machine, poised for triumph. In the heat of execution, however, your psychological vulnerabilities hijack the controls, alchemizing gold into dross. The methodology itself endures unscathed. It is you, the human element, who falters, underscoring the inescapable truth that the most formidable opponent in trading is not the market's volatility, but the trader's own mind. This internal betrayal explains why legions of traders deflect accountability outward, vilifying their suite of indicators as unreliable, castigating their brokers for perceived manipulations, or decrying the markets as inherently rigged against the individual. In reality, these are mere projections. The authentic warfare rages within, where the inability to hold trades serves as a glaring reflection of emotional brittleness, a fragility that the market exploits with predatory efficiency, probing and prodding until cracks become chasms. Among the most pernicious consequences of this habitual truncation is the subtle yet profound neuroplastic reshaping it imposes on your brain's reward circuitry. Each time you abbreviate a profitable run and bask in the ephemeral glow of relief, your neural pathways flood with dopamine, the brain's currency of reinforcement, imprinting the action as a savvy, protective maneuver. You emerge feeling not just safe, but intellectually superior, a guardian of your gains. Invariably, though, as the market validates your initial foresight by surging to the predetermined target, a corrosive tide of regret washes over you, gnawing at your resolve and sowing seeds of doubt. This duality spawns an emotional maelstrom, a vertiginous ride of fleeting peaks and abysmal troughs that entrenches the cycle deeper with each iteration. You unwittingly program yourself to chase the narcotic of instant alleviation over the sustenance of disciplined strategy, forging a behavioral groove so profound that it bypasses conscious deliberation. Your hand acts on muscle memory. Executing the close before rational faculties can mount a defense. This evolves into an insidious form of psychological addiction, wherein the lure of swift, superficial validations supplants the quest for profound, compounding achievements. In the unforgiving ecosystem of trading, such addictions are lethal, as they contract your perceptual horizon from the panoramic vista of long-term strategic coherence to the tunnel vision of immediate emotional balm. Your trading devolves from a calculated pursuit of optimized returns into a reflexive quest for psychic equilibrium, a paradigm that the market punishes with unerring severity through eroded edges, squandered opportunities, and the slow bleed of capital that leaves accounts anemic and aspirations unfulfilled. Let us strip away the illusions and confront the stark, unadorned truth. Your chronic inability to hold trades stems not from the market's inscrutable terrors or its labyrinthine unpredictability, but from a foundational deficit in self-trust, a profound mistrust that permeates every layer of your trading ethos. You question the thoroughness of your analytical prowess, the resilience of your strategic framework, and the impregnability of your risk management protocols. Most critically, you doubt your own fortitude to coexist with discomfort, that raw, unfiltered sensation which is the crucible of true growth. For holding a trade demands nothing less than immersion in this discomfort, the stoic tolerance of profit ebbs and flows like waves crashing against a steadfast cliff, the unflinching observation of retracements that flirt dangerously with your entry threshold, testing your nerve without mercy, and the patient vigil for confirmatory milestones that may demand hours, days, or even weeks of vigilant waiting amid uncertainty. If you cannot forge an alliance with this discomfort, if you view it as an enemy rather than an ally, premature exits will forever be your escape hatch, perpetuating a cycle of stagnation that bars the gates to mastery. To etch this contrast indelibly, conjure the image of two traders embarking on parallel voyages, identical analytical foundations, synchronized entries, harmonized stop-loss placements, and congruent targets. As the trade unfurls in their favor, Trader A, ensnared by the initial flicker of green, yields to panic's grip, liquidating for a token profit that barely registers on the scale of ambition. Trader B, besieged by the same visceral fears and seductive temptations, summons an inner reservoir of calm, anchoring firmly in the system's proven integrity. Refusing to waver, the trade culminates at the apex, as prophesied. Trader A drowns in the quicksand of regret, replaying the what-ifs in an endless loop. Trader B savors the full bounty, his confidence fortified. Project this divergence across a century of trades, and the gulf widens into an abyss. One trajectory soars with compounded growth, a testament to disciplined compounding. The other flatlines or spirals downward, a monument to squandered potential. Herein resides the alchemical power of holding trades. It transcends mere correctness, elevating execution to an art form where fidelity to process eclipses the allure of momentary whims. This insight illuminates why seasoned professionals exhibit a comparative nonchalance toward entry precision, a fixation that consumes retail traders like an obsession. They discern through the lens of accumulated scars and triumphs that the authentic edge lurks, not in the surgical selection of the perfect candle for initiation, but in the masterful orchestration of self. Once the position is live, navigating the psychological tempests that ensue. With the poise of a captain steering through a storm, engage in rigorous self-examination. How many times have you severed a trade in its infancy, only to behold it blossom to your exact forecast? How frequently have you plundered your own treasury of profits by fleeing discomfort's embrace? How often has your strategy demonstrated its merit, yet you abdicated your role as its faithful steward? This is the excruciating verity that every trader must stare down. The market does not conquer you. You orchestrate your own downfall through unchecked emotional sovereignty. Paradoxically, the discomfort you so ardently evade is the very philosopher's stone of your ascension. By welcoming it, by rigorously training to traverse the emotional wilderness, muting the cacophony of exit urges, and anchoring in rational foresight, you catalyze a metamorphosis in your trading alchemy, not through radical reinventions of technique, but via the maturation of your psychological constitution, evolving from reactive novice to resilient sage. Holding trades is the embodiment of this maturity, the deliberate cultivation of emotional sinew to chart the course undeterred. It lacks the allure of spectacle, no pyrotechnics, no adrenaline-fueled drama, merely the quiet rigor of restraint, the deliberate inaction of hands folded while the mind riots for intervention. Yet this ostensibly banal discipline begets outcomes of extraordinary magnitude, distinguishing the elite who persist from the multitude who fracture under pressure. True ascension demands self-mastery as the primordial prerequisite. The genesis lies in a pivotal acknowledgement. Premature terminations are not shields of prudence, but saboteurs in disguise, eroding your foundation with each concession. Every early closure enshrines fear as sovereign. Every plan-bound hold coronates discipline. Through iterative forging in discomfort's forge, one paradigm crystallizes as your essence. The selection rests upon the crucibles you navigate. Therefore, in your forthcoming profitable endeavor, as the green radiance beckons and the compulsion to close surges like a tidal wave, institute a deliberate pause. Probe the impulse. Is this decree from my strategic blueprint or fear's cunning facade? Should fear reveal itself, the righteous path crystallizes, for the odyssey of trading maturation mandates the embrace of the arduous amid unease's zenith. In this arena, the formidable choice, to sustain the position until the plan's edict decrees otherwise, heralds the genesis of unassailable discipline, transmuting you from passive participant to sovereign commander of trades. The market functions as an implacable mirror, casting the sharpest glare upon impatience, that stealthy interloper who infiltrates without proclamation. It insinuates itself subtly through innocuous whispers. This unfolding is interminable, a waste of precious moments, or what if an abrupt reversal ambushes my gains? These murmurs escalate into corporeal manifestations, tensed shoulders like coiled springs, respiration abbreviated to shallow gasps, digits hovering perilously over controls as if magnetized. Ere long, your focus dissipates from empirical chart narratives to the subjective turmoil of inner sensations, propelling actions divorced from strategy, birthing closures dictated by impatience's tyranny rather than planned rationale. At its core, the impediment to holding is not the market's intrinsic machinations, but the inexorable tyranny of time itself, a dimension that exerts pressure more ruthless than any volatility spike. Your prognostic acumen may prove impeccable, yet if the velocity of realization defies your internalized timetable, an internal disintegration commences, unraveling composure thread by thread. This chronological nemesis transcends mere directional fidelity. It demands the Herculean feat of outlasting the discordant symphony within your cranium, as price meanders its labyrinthine route. Envision two traders, custodians of congruent setups, corroborated hypotheses, fortified stops, attainable summits. After a mere 30 minutes of stasis, one succumbs to restlessness, his psyche fabricating pretexts for egress, overlooked headlines, immobilized equity, siren calls of alternate ventures. He capitulates, salvaging break-even or negligible scraps. Mere hours later, the trade ascends to glory. His counterpart, unperturbed, adheres to the covenant of plan, granting the market latitude to mature on its terms. One harvests transient reprieve, the other tangible triumph. This vignette encapsulates the quintessence of trading psychology. Collapses arise not from analytical deficiencies, but from impatience's siege. Traders are not felled by markets per se, but by their intolerance for temporal elongation, insisting upon rewards, synchronized top-Ursnal chronometers. Yet markets bow to no mortal clocks, evolving at their sovereign pace. Your vocation is not temporal dominion, but resilient perseverance. Impatience cloaks itself in the garb of rationality. The momentum wanes ominously. This stagnation portends peril. Better to safeguard this modest boon. More often, these are cerebral artifices, rationalizations engineered to assuage the anguish of anticipation. Akin to an interminable odyssey, be it a transoceanic flight or a marathon trek, the terminus is assured, yet the interim's tedium assays your mettle. Markets mirror this ordeal, retracements, lateral drifts, deceptive feints, each a gauntlet flung, inquiring, how fervently do you covet this resolution? The majority capitulate prematurely. The tenacious endure, claiming the laurels of longevity. Retrospect your abbreviated ventures. Were they annulled by thesis invalidation or sheer inability to abide stasis? Invariably the latter, impatience not only pilfering pecuniary yields, but also the forge of disciplinary evolution. Each concession fortifies the reflex tobscond under temporal duress, recalibrating trading from plan execution to merciless scavenging. Consequently, even fortified strategies atrophy. Edges dissipate through hasty reaping as 1.3 aspirations devolve to 1.5 via endurance deficits. Postmortems indict methodologies, blind to patience's void. In a twist of irony, patience, perceived as inertia's synonym, reigns supreme. The ethereal demarcation between perennial victors and erratic enthusiasts. Any soul can trigger entry. Scant few withstand the market's capricious theatrics, hour upon hour, day upon day. Patience is no passive virtue, but an active bulwark. Each moment of restraint a defiant, stand against self-destruction's allure. Assuming your edge withstands empirical scrutiny, your imperative is abstention from meddling, permitting its fruition unimpeded. Discern the chasm between foolhardy optimism, clinging to debunked losers in vain hope, and disciplined vigilance, nurturing viable positions to ripiness. The former corrodes capital and spirit. The latter erects empires. Patience contravenes our genetic blueprint. Humanity craves kinetic engagement, shunning stillness as vulnerability. Distraction beckons when unease mounts, hence the ease of digital scrolling over meditative silence, or the temptation of paltry profits over protracted holds. Trading subverts this paradigm. Impulsive deeds often precipitate ruin, while measured restraint begets bounty, unflinchingly stated, without mastery overholding. Your trading apex remains eternally deferred. Intermittent windfalls may tantalize, but authentic expansion hinges on liberating winners to expand unbound. Mere fragments nourish no legacies. Only full realizations compound fortunes to vanquish impatience, eschew denial, embrace and temper through immersion. The weight's sting never wholly vanishes. Veterans attest to its persistence, but mastery lies in defiance, not eradication. Discipline akin to musculature burgeons under load. Each discomfort navigated hold augments resilience. Each evasion atrophies it. Conceive patience as your portal to professional echelons. Devoid of it, you linger in retail purgatory, amassing trifles and torments. Embraced, it vivifies strategies, subjugating sentiment to structure, propelling you toward transcendence. Fundamentally, this discourse assails impatience's covert devastation. You cannot eradicate it, but you can subjugate it, cultivating endurance over reactivity, viewing each plan faithful instant as conquest, where execution eclipses ephemeral results. In your ensuing trade, as temporal gravity bears down, internalize. Impatience is the crucible, assaying not merely intellect but fortitude. Withstand the void, the monotony, the oscillations, and you transcend to professionalism's rarefied air, the veneer of trading, candlesticks, oscillators, blueprints, obscures its profound verity. It's a dominion of time, not ticks, demanding patience's alchemy, endurance's forge, and the resolve to outlast frailty's temptations. Triumphant traders endure not via esoteric talismans or veiled enigmas, but through waiting's mastery, biding for pristine configurations, permitting resolutions to gestate, and allowing edges to corroborate across epochs. Not ephemera. Markets are engineered sieves, each volatility burst, surges, plunges, oscillations, a litmus for conviction versus avarice. Skepticism incites capitulation, truncation, intrusion. Epiphany wounds yet ignites metamorphosis. The long game's ethos reframes solitary trades are specks, inconsequential. The mosaic of disciplined aggregates defines destiny. Discard per-trade obsession. Adopt the casino's equanimity. Per-spin chaos yields to volumetric supremacy. Theoretical simplicity belies practical rigor. Biology inclines toward immediacy, recoiling from deferral. Countermand via systemic discipline, preordained stops and targets. Pre-entry pacts, lucid premeditation, thwarts turbulent improvisation. The long game exacts emotional fortitude, defeats, slumps, self-doubt are tolls, not terminations. They constitute the curriculum. Elites persevere sans vindictive reprisals or doctrinal desertions. They weather tempests. Belief their compass. Belief accretes from empiricism. Ledgers off-trades, simulations, dissections, each datum a bastion against effective assaults. Humility undergirds. No intellect eclipses the market's infinity. Eschew conquest. Steward risk, honor process. Defer to odds. Hubris invites cataclysm. Reverence begets restraint, potency and poise. Paradox unveiled, relinquishing granular grip amplifies sovereignty. Micromanagement enslaves to pixels. Trust emancipates, stabilizing psyche, enthroning execution. Incentives initially occult. Discipline stadium, patience's apparent barrenness, restraints seeming forfeiture. Yet temporal alchemy reveals compounding, accretions of victories, safeguards against abyss, mastery over impulses. Hindsight unveils perpetual dividends. Supreme irony yields transcend ledger balances, its metamorphosis incarnate. Wealth waxes and wanes. Forged attributes, discipline steel. Patience's depth, resilience's armor, abide eternally, market tempered for life's myriad trials. Thus, interrogate not transient harvests. Fortune favors the fleeting. Query endurance. Can you sustain as others yield? Discipline amid frenzy? Serenity amid clamor? Affirmative and probability consecrates you. The long game spurns haste's allure, crowning persistence, in time inexorably.